Investors and traders, welcome to the channel Market Chart Pattern. Today is 20th of August 2023 and I hope everyone is having a great weekend. In this video segment, we are going to take a look at the key US stock indices as we always do. This video is for educational purposes only and it is not a financial advice. So guys, before we begin to take a look at the SP 500 and the key US equity market indices, let's take a look at one of the key things, which is the treasury bond market. And this past week there had been a lot of action in the treasury bond markets, especially 30-year note, 30-year bond, which is a long bond. And I had done a video about it last weekend, I believe. I'll try to put a link to it, and we were discussing this market, and we were discussing also that you know, if this brown line which we have here, the market was below that, the chances are it's going to go and retest the lows of October of 2022. And what we have seen since last week, the price action in this market has been that the market has been selling off. Now, the way the bonds work is lower price means higher yield, which translates to the fact that, you know, there is going to be an expectation of higher interest rates. So let's take a look at this one really quickly on a daily chart level. This is the chart we were watching. One of the things that has been in place is clearly the bearish symmetry that is still in place, and we have seen a few attempts here for this symmetry to be broken, but it hasn't happened yet. And what we have seen is market decline in price, which indicates higher yields. Now this is the low which came in October of 2022, so last year, and we are very close to that level. And in my opinion, that level could actually be a pretty good support level. Now what could happen is that perhaps this low gets challenged, the price might move lower, but then ultimately close higher, and that would be a fantastic classic setup that price rejected lower price, but we'll still need to see confirmation. Now it's getting very close to this level. It also appears to be a fairly oversold market. Also, we have this micro trend line here. In fact, I'm not going to draw this here. Let me try actually. It looks like a 3 drive to a bottom pattern formation. Let me get the Fibonacci 161 1272. Let me remove this. It's a little bit easier to see. So there we go. So this one is in fact 1.618. Let's just remove that, and let's see what the other one is. Here we go. And this one is most likely 1.272. Here we go, exactly that. So anywhere between this and this, which will in fact take the lows out, this could potentially be a 3 drives to a bottom pattern. Let me actually share this area, that way it is easier to see. Here we go. Right here, there's a possibility, as we discussed, these lows could get challenged. So now, this past week, the news had been about the 30-year bond yields and this market getting sold off, and that has had an impact on the stock market. But the bond market or the debt markets are much bigger than the stock market. Now let's take a quick look at this on the 10-year note as well. Here we go, and we see a similar kind of pattern formation around here as well. So this is the one thing that we will have to keep an eye for the next week, and especially the early Mondays and Tuesdays, what the price action is going to look like for this, because in my opinion, it's going to have an impact on the stock indices price action. The other market that we need to keep an eye on is the Bitcoin. So the Bitcoin market actually had a big slump last week, It's a market that I've not done too many videos about it, but if you go and watch the old videos, we were watching 28,000 as a key level. We had a number of key Fibonacci ratios coming together to form a zone of confluence zone, and when the market finally broke above it, that was a good sign. But we have seen the market do not break too much above it. It went roughly to around 32,000 level, and now where it is it's really testing this trend line here, and it's really sitting at its 38.2% Fibonacci retracement from the lows of November of 2022 and the recent high of July of 2023. So if this level goes away, so that's going to be a break of the trend line, and it's also going to be breaking below 38.2% Fibonacci retracement. So there's going to be selling pressure in the market, which is also likely to influence the price action in the broader stock indices in the United States, maybe elsewhere in the world as well, but for now we are just going to cover the US stock indices. Okay, so let's get back to the S&P 500. Let's quickly take a look at the weekly chart. This is something we took a look at last week, and this is the pattern formation where we have the 78.6% Fibonacci retracement come in and 1.272 expansion right here. It's forming a confluence zone, and just below that we have the one-to-one price projection, which we like to call ABCD. It's more visible, easily visible on the daily chart. We'll take a look at next. So what we have seen is on the daily chart, we were watching for a key level last week. When that level was broken to the downside, that was an early indication that there is selling pressure coming into this market. Market sold off, and it is getting very close to its 20-week moving average. And also, if I just draw a retracement and have a look at the 38.2% Fibonacci retracement, it's also very close to around 4,300 level. And look, we are looking at the cash index. It's not the E-mini futures. This is the actual cash index. So there is going to be a confluence zone. So 4,300 is going to be a level to watch. Also, it's going to have some structural support right pretty much where it is right now as well, but selling begets selling, so it's possible that there is going to be some downward momentum in the early part of the week. It does look like the market is getting oversold, because we have had one down week, two down week, third down week, so 3 straight weeks the price has been moving lower. So maybe there is some oversold conditions also building up in the marketplace. Let's move to the daily chart. So here, what I would like to remind our subscribers is that this is the pattern formation that we were watching for. So this is something which we had identified in advance, and what our thinking was, when it reached the 78.6% Fibonacci retracement around 45.40 level, we said that if the market is able to convincingly close above this on a consecutive daily basis, on closing basis, then the chances are that perhaps it's going to go and test the all-time highs from early 2022. If not, then that means that we have this ABCD pattern formation as well, and a number of things coming together as we have seen on the weekly chart. Then perhaps this level could be a strong resistance level. And so far what we have seen is the price pull back, and it is actually pulling back to a region that we had also identified, and that comes around 43.26. Last week's low was 43.35, so within 10 points range, so fairly close. And also the good thing to note is that on the daily basis, the market closed positive. So it was in the end, the close was higher than the open, and we had a bullish candle formation. That's always good to see. And the other thing is that we have some structural a region coming very close, which could also be a zone of support right here. Further down, the other level is if this level gives away, then we need to start thinking about certain things. Let me actually also get some downward the confluence level here. If this level gives away, on a closing basis, we would like to see 2 daily closes. Then it means that obviously the correction is underway, and it could get a little prolonged correction, maybe a little bit severe as well. We'll have to wait and see. But what we'll have is a number of things coming together around the roughly around 4180 level. We have going to be this BC swing. We'll have this as a market symmetry thing, and then we'll have the 38.2% Fibonacci retracement coming in from the October 2022 lows. And also we have this trend line. So we'll have a number of things coming together. If this 38.2% Fibonacci retracement is broken to the downside, then that could be a pretty serious thing to look at. Now, interestingly, where the market closed at that level, and pretty much in about 20-25 points on the S&P 500 is the kind of region we are looking for at least a short-term bounce to come in because of the oversold conditions. Whether it's going to happen or not, we'll have to wait and see. Now I'm going to remove this because this is what we're looking at last week, where the price was really sitting at 61.8% Fibonacci retracement. When it closed below that, we knew that the market is likely to go down. Now, the interesting thing is that if the market begins to rally, where could it rally to? So we'll just bring our Fibonacci retracement here, and our first level will be 44.40. That's going to be the 38.2% Fibonacci retracement. One of the things is that if the market finds a great deal of resistance coming in from this 38.2% Fibonacci retracement, then we could have a stronger move down, because in strong trending markets, 38.2% Fibonacci retracement is the one which provides a great deal of resistance or support, depending upon which way we are looking at it. So it's going to be a key one to look at, and above that we have the 61.8% Fibonacci retracement around 4,500. So this is what we're looking at as S&P 500 cash. Let's move to the shorter term, the S&P E-mini futures. So this is the ES, and in this market a similar kind of a picture. It was sitting right at the 61.8% retracement when we did the video last week, and when it went below that on Tuesday 15th of August 2023, we knew that key level has been broken and the price is likely to move lower, which it has, and it's really reaching towards 43.26, perhaps to even a little bit lower. Let's do a quick 38.2% Fibonacci retracement. Yeah, so this is the exactly 43.26 and 4,300 roughly on the cash index. Let's also quickly take a look at the weekly chart. Yeah, and this one is also approaching the 20-week moving average, a little bit below where the market is, roughly around 43.40. Okay, so the next market we'll take a look at is the NQs. So this the NQs, again, similar kind of pattern formation, although the NASDAQ 100 futures had been stronger, because they went quite a bit above the 78.6% Fibonacci retracement, and then we had this 1.618 expansion coming around here, and for the past 3 weeks the market has been moving lower. It is also getting very close to this really important level, which is a 20-week moving average. Also from a symmetry perspective, this is how much the correction was in this market before. It's also getting very close to that level, and also the market getting fairly oversold. So looking at the S&P 500 futures, and also the cash market, and now the NASDAQ 100 futures, we are getting into a zone where there is likely to be a bounce likely to happen in the market soon. Now, whether that's going to happen or not, we'll wait and see, but the oversold conditions is something which we might have to look at. Also, that per our analysis, the market is getting into a zone where it is coming at levels that we have been watching for, and if the market keeps on breaking lower, then 38.2% Fibonacci retracement comes around 13,900 roughly, and going below that, we'll have to reevaluate things. Now that's the daily here. In the daily chart, what we can see is that after completing this pattern that we had a look at on the weekly chart, the market actually went below, and on last Thursday broke below this swing point, and it has come right into this on the daily chart, a rising trend line, and also it is getting closer to the levels that we have watched in terms of support on the weekly chart. And there's another support level coming in around 14,350. The key thing is that whether this correction it's just the start of it, or it is going to be something which could extend. So these are the key levels that we are watching. If they begin to break to the downside, then the possibility that this correction is likely to extend, maybe become more like a multi-month pattern formation, the chances will increase, in my opinion. Okay, so the next one we will take a look at is the Dow Jones. So this is the Dow Jones E-mini futures. Here, the price is actually sitting very close to this structural support coming in, and also we have this, the BC swing, symmetry formation coming in, and also we have this trend line here. So a number of things coming together. So again, it's also getting into kind of the levels that we could expect a bounce from in this market as well. So that's good to see, because we are seeing some oversold conditions, plus we are seeing key levels being reached in all these key markets that we like to take a look at in stock indices. Now let's move to the Russell 2000. This is small caps. I am going to move to the weekly chart here. So what we can see is that this has been in a long trading range. We had discussed this last week as well, so I'm not going to go into too much detail. And now, after reaching the top of the range and finding resistance from this region that we were expecting, the market has moved back into the middle of the range. Now from here, whether it's going to go and test the lower lower boundary of this range, we have to wait and see. But one of the things that I would like to point out is that this index has gone into a very long sideways trading range, but it still remains around the 50% retracement of the lows of March of 2020 and the highs reached on the 8th of November 2021. And also we have this structural support right at the 50% level as well. So that's something which we have to keep an eye on and watch. So this is what we are taking a look at in terms of the key indices that we like to follow. I will be doing another video about the key US banking stocks, because that is also a region that we need to pay attention to. If there is going to be, from a price action perspective, we see some pressure coming in, some trouble in the financial stocks, then it's an indication that perhaps something is happening in the financial banking sector side of things, which almost always lead to something more prolonged in terms of how to put it, price action or pattern formations to be watched. Also, the key US stocks that we follow, I will be doing a video on it later, not today, perhaps tomorrow. And some of those stocks like Apple, they had been really overstretched as well. Number of them that we have been watching for quite a long time actually met our targets, and some of them even exceeded our targets, which is a good thing. And reaching those extended levels, some of them have pulled back quite a bit. For example, the Microsoft, you'll see it in video, I believe it retraced about 38.2% Fibonacci retracement, so that's a good level to watch. So there seems to be some sort of a rotational aspect coming in, where some money moving out of some of these really extended tech stocks and perhaps moving into some other sectors such as energy. One of the things with the energy has been that although we have seen over the course of last 3 months pressure in terms of lower prices in crude oil, for example, but the stocks themselves, the major integrated stocks of these integrated refiners such as Shell, Exxon, they haven't pulled back that much. So this means that they are holding their levels. I'll try to do a video and probably start a new segment in which we begin to take a look at the energy sector through the eyes of the ETF and also certain individual stocks. It's going forward, it's going to be an important sector to look at. So we will add it to our things that we like to keep an eye on. So thank you very much for watching the video. If you like how we do the analysis here using pattern recognition, Fibonacci ratios, confluence levels, then please do subscribe to this channel. And if you found this video of educational value, then please do hit that like button. Thank you very much for watching. Good luck and good trading.